And I do believe we are now live on YouTube. Tackle Trading's halftime report. We've got Coach Matt, Coach Tim, and Coach Cody here. Matt, are we live? Do we got this working right?
We are live. We
All right.
figured it out. Zoom is having some connection issues with YouTube. We had to do some praying to the trading gods out there, and they came through for us today and got us on Zoom just fine though.
Yeah, how you doing today, brother?
Tim, doing really well. Doing really well. I'm excited to be here with the crew this week, and it's going to be a big week in the marketplace. I'm very excited for the scouting reports coming out this week, and have some good triggers out there for the week too. And there's a lot of news this week that we need to get everybody caught up to speed on. So excited to be here.
Did you see the End Game movie, the Avengers movie over the
No,
week?
I have not seen Endgame. I have not seen Endgame, and trying to dodge the spoilers on Twitter is almost as hard as trying to dodge the spoilers from my 9-year-old daughter, who keeps on just begging to talk to me and drop hint after hint. In fact, I pretty much know the end of Endgame already because of my 9-year-old. So, but no, I'm going to see that on Wednesday, and I'm excited for that as well.
Very good. All right, let's start with the market analysis. Start with the S&P 500. Obviously, we've had a good bullish run this year, Matt. We're about halfway through earnings season now for S&P 500 components, and here we are pressing a new high. What's your read on the market?
Uh, my reading on the market, and Cody laid it out very, very well in the Tackle newsletter this week for the Pro members, is we upgraded it, Tim. Coming into the week, I loved what we were seeing in the marketplace last week. It played a lot of defense above the breakout channel. You didn't get the price appreciation that you might have expected on the breakout, but now we're continuation with that. It stalled at the all-time high. I believe it had an intraday all-time high, but now you're breaking out of those all-time highs, Tim, and this is something we've been expecting for weeks and weeks and weeks. So here for the tackle community, we upgraded the S&P 500 coming into the week, and even with that said, it hadn't really confirmed the breakout as of Friday, but today it looks like we're breaking out, and we're breaking out of that 2947 all-time high right now. Obviously, it's got to close it by the end of the day, but to me, a trigger above 2950 is another entry here. I like what I'm seeing in the marketplace from a bullish perspective.
The only real notable company on the S&P that had earnings this morning was Lowe's, L. Obviously Home Depot, Lowe's, their competitors and whatnot. L came out and the stock is actually up here 2% today, looking like a muted reaction. Actually, it looks like L,
Yeah,
just
there
L
we go.
itself.
Yeah.
Yeah, a little bit of a gap out into some resistance points. Obviously, Home Depot was a juggernaut for a while there. What was your read on L?
Not a real big read. I mean, breakout of a continuation pattern. That's a runaway breakout at this point in the chart, and a lot of this will kind of base on what we see at the end of today. Obviously, it tested down, came back up, showing some strength coming into the midday morning here. So obviously, a positive response. Earnings numbers. I don't track this company very much, but earnings numbers came in at the actual 1.27. Again, I don't know exactly what the earnings numbers were, but a positive response. That looks like a runaway gap at this point.
And probably the story of the day is going to be Google's earnings after the bell, GOOG, or the L, either the A or the C shares would be about the same here, Matt. And obviously technology, S&P, and everything major is going to be moving on information like this. Anticipation for Google's earnings. What's your read?
Obviously, Lowe's is not a market mover. Google will be a market mover here, and this is one of the things that the market is kind of waiting on this week. And we'll get into all the news that we expect to kind of come out in a very, very heavy earnings week, as well as a heavy economic week this week. So it's going to be interesting to see what Google does. Google can be a catalyst. It's a $950 billion company, very similar to Microsoft and Amazon from last week. You got Google and Apple on tap this week. That's going to be major catalysts for the marketplace.
Yeah, and many obviously tomorrow as well. We're going to be rounding those up as we go. As I look across the S&P 500 today, performance losers, CHRW, some of the transportation stocks, JB Hunt. Give me a quick peek at CHRW, if you would, and JBHT. Both trucking companies down very, very big here post and getting ready for earnings, Matt. Kind of a guidance downgrade on this one. How do you react to a candle like that?
Never good before earnings here.
Mhm.
Never a good thing before earnings when you have a major downward movement like this. And again, I don't know what the news here is, Tim, but was it a guidance downgrade?
No, it looks like actual reaction just around all of the transports, some downgrades across other different areas. JB Hunt is down as well. JBHT, take a peek at that one. I think they're all just down here, Matt. That one's actually breaking below a low base support point post earnings. This
Yeah,
one's even
post
trading.
earnings, that's shortable there on JPHT
Yeah.
on a downgrade on guidance with the entire sector breaking out of support right here. Big red candle breaking out of there. You should see price depreciation coming back down into the 90 handle here on that post earnings. With the one on CHW, you know, there's nothing to see there because you can't do anything about it with earnings on tap tomorrow. But with this one post earnings breaking out of that support level, you know, not a company I typically trade here, but that does pique my interest on the breaking of support.
Yeah, trucking, transportations, they're all grabbing my attention as well. A lot of oil and gas companies in the news, but I do want to go on to Intel for a bit as well. Gap down on Friday. I'm sure you talked about it when I was gone. Here's a continuation to that gap. Now, the trend is complex to say the least. You have some old resistance, new support potentially here, Matt. S&P 500 component, Dow component, NASDAQ
Tackle
component,
25 component.
Tackle 25. What's your read on Intel?
We talked about this last week on the gap, and there's really nothing to see here until we see a new trend start to develop. I'm looking at that 50 handle here, and Noah talked about when he sees something like this on a stock he wants to own with volatility still being relatively high, maybe selling a naked put at that 50 handle. If you want to own the stock type scenario here, you can still get good cash flow on it, but you got a lot of downward pressure here, and in my opinion, it's better just to kind of wait to see what's going to happen with the momentum. Bears have momentum off of really negative earnings report from last week. Downgrade on guidance was very nasty. One of the worst earnings reports we saw here last week. Keep an eye on how Intel's going to handle that $50 mark. And if you break this down into a weekly chart here, Tim, you can kind of see how it's now coming back down into that very strong level of resistance right there at 50. It's also where the 50-day moving average is on the weekly chart as well. So keep an eye on it. Obviously, this weekly chart is starting to slow down, but we're only on day one of the week, so let's not get too excited for this. But in terms of this, I would keep an eye on that 50 handle and see how Intel really performs as it gets around 50. It's a stay away from me until we see support really kind of hold here.
Move on to the Dow Jones Industrial Average, if you would, and let's talk about the large cap blue chip companies. Dow Jones earnings dates this week. We've got quite a few actually going to come up this week. Apple, Merck, Pfizer, Dow, DuPont, and McDonald's.
Apple.
Nobody's bigger than
More
Apple, right?
Yeah.
Yeah. Yeah.
Well, you are seeing some subtleties on this chart that is separating the S&P from the Dow. S&P is breaking out of those all-time highs right now. The Dow is lagging behind it just a little bit, has not broken out. But one thing I'm also seeing in the Dow component specifically is you're seeing a little bit of slowing momentum into this resistance level. Look for this to consolidate a little bit, especially until we start getting some news coming out later on this week. A breakout here would be significant. But if I'm looking at the indexes right now, I love that breakout we're seeing on the S&P. I love the NASDAQ as well. The Dow Jones would be ranked third for me right now.
Yeah, there's not a lot of action across the entire Dow Jones Industrial, but I'll tell you, the banks are looking pretty good. Goldman Sachs
Banks are
pressing
fantastic right now.
JP Morgan pressing near an all-time high, Matt. JP Morgan's extending from really their run after post earnings as well. They're looking pretty strong. Some other companies coming off the bottom. As I'm looking across Dow components, you've got some momentum change out of leadership, Matt, but Apple this week is going to be critical. Visa is hitting an all-time high today. All in all, I do think the Dow and the S&P are pretty similar in my opinion as well.
Well, let's talk about those banking stocks for a second here, Tim. In the newsletter every single week, we rank every sector from a variety of different perspectives, but we put them on the scoreboard and we rank them from, on the scoreboard, it's a football field, and right side of 50 is typically slightly some degree of bullish, and the more you get to the right side of the scoreboard, the more bullish you are. Left side of it is bearish, and the more left you get, the more bearish you are. The biggest upgrade that we of any sector, okay, that got ranked this week in the newsletter was the financial space. And what we saw coming into Friday, and obviously the continuation of what we saw today, is we saw it breaking out on Friday, and we took that as a very positive sign coming into the week. With this was the only sector that was really getting that big upgrade for tackle this week was the financial space. And so financial went from 40, which is in that neutral, expecting a breakout, to all the way up to 25, which is near that +2 bullish territory. When you see in the score scoreboard, us go from 40 to 25, that should be an indication that we're seeing something in those charts, and not only the charts of the sector itself, but the charts of the individual components of the sector as well. So financial stocks got a big upgrade for us at Tackle Trading, and it was led by financial, and you're seeing that continue here today with the gap and run in the financial space up 1.32% today versus the Dow that's currently up 0.22%, basically doing nothing. The financial space is doing very, very well over the course of the last 2-3 days in the marketplace. And when you're looking at some of these bank stocks, like you mentioned, Goldman Sachs here, approaching that breakout at 210. When you're looking at JP Morgan, you mentioned them, the breakout of the high base of 115, and now you're starting to see the price appreciation coming out of there. The stock I was looking at coming into today was Bank of America. It was on the stock report. It was a stock that I broke down and analyzed in the stock report this week. And I loved what I saw on Friday with the confirmation above the weekly highs. I loved what the continuation we saw here today, and now it's on its way up to those targets.
Yeah. Another component back to the Dow, though, that we do need to talk about is Boeing. Boeing's CEO is going to go in front of their shareholders and try to, build some relationships back there. Maybe talk to them pretty bluntly and directly about where they're going from here, Matt. Boeing's
Are they also going to tell their investors, why didn't they tell their biggest buyer of the 737 Supermax that they had a problem after the Lions jet crashed? Are they also going to finally admit why they didn't tell them about that?
Are you losing more faith in Boeing as you go through
I've
this?
said this for weeks now. I'm very concerned with how Boeing has handled this situation post that March crash, and it's almost like they want to shield the public from what is really going on. And I've felt for a long time now, well, since the crash, that the best thing Boeing could do is be transparent in absolutely everything that's been going on. And I just don't feel like Boeing has been transparent in what's going on. I don't feel they've been transparent, not since that second crash, Tim. I don't think they've been transparent since the first crash, all the way back 8 months ago now, the one that crashed in the what was the sea it crashed in? It was out of Indonesia. But so no, I'm looking forward to reading what's going to happen with the CEO and the 150 big time investors that they're meeting in some, I don't know where they're meeting, but it sounded like some school auditorium or something along those lines. So it's going to be interesting to see what comes out of this. But I just don't think they've been transparent. And Maria, maybe they don't know. Maybe they don't know. But I doubt that. Boeing is a $300 billion market cap company. They've had 8 months of research on what's going on here. They have not been forthright. They have not been transparent. And maybe they don't understand certain amount of things, but they could be a hell of a lot more transparent than they are right now. And I just don't have confidence in Boeing right now. Will that confidence come back? Maybe, perhaps. Maybe not in the short term. I don't know. But it is a company I still support. It is a company I still really, really like. And it's one of the better companies out there. But they need to do a better job being transparent with their investors and the public. The public needs to get confidence back in Boeing.
Yeah, let's move on to the NASDAQ 100, if you would. As I'm talking about and thinking about Boeing and their transparency and all the different earnings that are going to be coming out, one company that had to get transparent last year, Matt, was Facebook. Out of the mega cap companies on the NASDAQ, we'll talk about Facebook next. What's your read on the NQ here?
Love it. Everything about it. It's the number one index for a reason. The sector XLK is the number one sector for a reason. There's euphoria going on in the NASDAQ right now, and I don't want to be the one that calls the end of it.
Yeah. No, it's very strong. I mean, you guys had technology ranked on the 15-yard line. I thought very good ranking, very appropriate. There's no doubt about it. It continues to be a juggernaut, but we do have
I think we had it on the 10-yard line.
Is it on the 10?
Yeah, in fact, some of the coaches, because of the overextended nature of the NASDAQ, wanted to downgrade it. And I got to be honest, Tim, I pulled veto on it.
Yeah.
I did. I just said, guys, I get the overextended. It is absolutely overextended. When you're looking at this NASDAQ and you're seeing, okay, from the bottom at 6,600 to the top of that range at 7,200, 600 points. When you're talking about the bottom end of the channel at 7,000 up to the top end at 7,550, 550 points. When you're talking the bottom end of the channel, 7,300 up to about 7,900, 600 points. So when you're looking at yield here, 600 points, 550 points, and then another 600 points, you are absolutely at the top end of its channel. If you pull on the RSI, let me pull on the relative strength indicator very quickly here, Tim. If you add the relative strength indicator, which is one of my favorite indicators to help understand overvalued versus undervalued zones, you are absolutely overvalued at 75. As you can see, it's been up here, and it's been more overvalued in this run than in any of the previous runs. And despite that, Tim, I still made the argument that the euphoria in the NASDAQ, and especially in light of kind of the positivity we should see coming out of the Chinese-U.S. trade talks this week, Mnuchin basically said today that they're in the final lap of these negotiations, and so we're seeing some positive headlines coming out of that, forming a little bit of a high base here. Okay, the S&P is stronger today, no doubt, but the NASDAQ is a stronger trend, forming a little bit of a high base at the top end of its channel. You really don't want to be aggressive until we see the NASDAQ break out here, but if you do get me a close above that 78, 79, it's off to the run. Now, obviously, Google and Apple can could be a Mack truck in front of it and a freight train in front of it, no doubt about that. But in the short term, this euphoria has taken over. The fear of missing out is taking over. And yes, some people might be, oh man, it's so far overextended. That's fine. Things can stay overextended in the short term longer than you realize they can. The markets can stay irrational longer than you can stay solvent to a certain extent. So don't question the trend. Don't question the pattern. Trend is bullish. Pattern is high base. The breakout is what you're looking for here.
Yeah, there's no more important company than Google tonight, but I got to tell you, Facebook's looking pretty good here today after a post earnings last week, Matt. Give me a quick look at Facebook if you could. It's not a pullback, but it's just momentum off the gap here. You know, they had a really good earnings report. I know you played that with that bi-directional play and whatnot. Reaction to Facebook's overall holding this gap here, and it is the top performer out of those mega caps.
Well, the one thing you don't know here, the first day after a gap, and really kind of the second day after a gap, you don't know where those support and resistance levels are going to form. And I'm not talking about support and resistance from a daily perspective, Tim. I'm talking about support and resistance from an intraday perspective. And so the first day after the gap, it's really difficult to assess where the market's going to start looking at those levels on the chart to start identifying intraday support and resistance. And when you break this down into that 30-minute chart, you can kind of start to see these levels start to form here. As you can see, as the market is, in this lock-in profit type mode on Facebook after a very positive response to the earnings, you start to see 190 get hit here. You start to see it get hit here close as well. And then on the opening price on the overnight, you start to see it get close into that 190 level. So you start to see this 190 level start to form as a little bit of a support. And as a trader, you can look at that level, and it's not strong in any capacity, but you can start to look at that level to say, okay, if I look at that upward movement in price off that hammer candle, and a hammer candle is a bullish indicator, followed by this upward movement in price, creating what's called a bullish engulfing type candlestick pattern, and you have that intraday support level at 190, you can start to formulate trading plans when you're looking at prepping the trade with the step system, and you say, okay, now that I have this upward movement in price, now that I have confirmation, now that I have an intraday support level starting to form at 190, I can now look at entries, I can look at a stop loss under 190, and I can start to look at potential targets out there as well. But before really kind of yesterday and today, you really don't have anything along those lines. So you have to kind of be patient, and you got to wait and see for those intraday levels to form. Now that they've formed, you can go about your job as a trader and prepping the trade.
Move on to the RTY if you could, Russell 2000.
Call it a breakout. Call it a breakout.
Let me tell you, if it closes above 1600, you have to call it a breakout, Matt.
Absolutely,
I know it's got some pivot points, yeah.
Absolutely, 100%.
And that will not be a boring chart anymore.
No, it will not be a boring chart. In fact, we can start breaking down and analyzing this sucker again. Remember the one thing about the Russell. The Russell can fly. It can fly up and it can fly down. And when you have to break out on the Russell 2000, you can expect a little bit of catch up here. Now, if I have condors that are pricing in at, 1650, 1700 or 1750, depending on when you put the condor on, I wouldn't be freaking out necessarily, not in any capacity. There's management techniques. You still got a lot of range. But from a directional perspective, you absolutely could expect some price appreciation here when if you do confirm above that breakout channel at 1600. And to look at this on a weekly chart, you can kind of see the importance of that breakout here at 1600. You had the top end of the range here as as a snapback rally in the Russell 2000 was really driving it up about 16-17% from the lows here. Hits that head at 1600, consolidates for the next 2 to 3 months, really over the last 4 weeks, kind of hitting that 1600. Now on the weekly chart, you're breaking out of 1600 with no real price. You got a little bit at 1615 by 1620 you got to concern yourself with, but you should see price appreciation back up into 1650 based on technical analysis. Couple that with the daily chart showing a lot of momentum above the breakout channel. Not a lot of selling activity. You're towards the high of the day. You break this down into a 30-minute chart. You can see that breakout of 1600, price appreciation, and yet there's no profit taking here midday here today. You should still see some movement to the top side.
Yeah, quite a bit of strength there, obviously, on the Russell, and a breakout of 1600 is something we've been waiting for quite some time. So significant if it does hold it. Dollar
sign. Got to hold though. It's got to hold.
It's got to hold. No doubt about it. Dollar sign DXY, if you would. Let's move on to the dollar index and currency markets. It's been strong, broke out, pull back now, Matt, into a pivot. You've got old resistance that could form new support, but the history has had deeper pivots here. What's your expectation on the dollar?
If you can read this chart, you should know my expectation before I even talk. If you've listened to anything in the halftime report in the last 4 months, you should know my expectation before it could talk. You're at the top end of the channel, you slowed your momentum down, and it should retest that support level at 97.5 by 97.70. I talked about that last Friday. I talked about that last Thursday. I'm talking about it today on Monday, and I'm just waiting for that to occur. Now, in the currency market, Tim, and let me specifically talk about the economic data we have coming at us this week, because that's going to impact stock markets, that's going to impact commodity market. But in no market do economic reports have a greater immediate and lasting movement than in the currency market. The stock market is not the economy. The stock market basically lags the economy. The currency market is the economy. If you see the dollar appreciating against the euro, you can basically say the U.S. economy is better than the Eurozone. That's basically what you can say when you're looking at the currency. And so the currency has we kept, even though despite the fact that we expect a little bit of a pullback this week, we did keep the dollar ranked at the 25-yard marker. I did make an argument to drop it to the 30 just to indicate to all of Team Tackle that, we're not looking to make a trade here until we get the proper setup. Keith King riding my ways there in the scouting report meeting. And when the great Keith King talks, that is the one time I shut up and listen, because Keith King has so much more experience than I do. And both of us kind of see the same thing, waiting on a new trigger here, either above the breakout channel or a retracement here. From an economic perspective, later on tonight, Chinese manufacturing data. We all know how important Chinese manufacturing data is. It's had a market influencer the last 3 months, so I expect that to be a market influencer tonight. Keep an eye on the overnight action as those Chinese markets start to open up at 8 p.m. Eastern, 9 p.m. Eastern, 10 p.m. Eastern Standard Time. Check the futures market if you want to see how Chinese data has the ability to influence the stock market as well as obviously the currency here. In the U.S., we had the PCE inflationary index. And Tim, I just want to say congratulations to the central bank for, finally announcing we have zero inflation. Because that's what the PCE report showed today, that we have zero inflation. And if you believe that, I got some land on the moon I can sell you. Me and Elon, we got some land on Mars, and on the moon we can sell you. Good old property rights there on the dark side of the moon. So I certainly believe we have inflation. I expect higher prices, and I still expect higher prices despite lowered total serving sizes and so on and so forth. But that did come out today. Later on tonight, New Zealand business confidence. That's going to be important if you trade the New Zealand dollar, the Australian dollar, and as well as New Zealand and then Australia both have a lot of influence when it comes to China as well. Tuesday in the U.S., consumer confidence, Chicago PMI number, which is a manufacturing report. Wednesday, GDP out of Canada, manufacturing as well. In the U.S., the FOMC, the Fed, is announcing monetary policy. And the reason we didn't start with the Fed today is because the Fed is important right now. They're not going to say anything, in my opinion, but we can break that down on Wednesday, Tim. Also, China manufacturing data on Wednesday. Thursday, the Bank of England has monetary policy announcement. And on Friday, you have the U.S. unemployment data as well as ISM manufacturing report coming out on Friday as well. You got, and that's just some of the major headlines. If you look at the economic calendar, T, you actually have just a gluttony of economic reports in every market this week. And so it's going to be a very volatile week, in my opinion, from a currency perspective, but that can create one of the bigger day trading type environments in the currency market. And so I'm looking forward to the currency market this week. From a swing trading perspective, though, I'm waiting on the breakout or the retracement here, and there's nothing to see until we get one of those, until we get one of the other. And it does look at this point in the chart, in the analysis, it does look like we're going to get that retracement. And when we get that retracement, keep that eye on 97.50 by 97.70 on the actual dollar index. If you get a pivot at that point, there's going to be a lot of good opportunity on long dollar cross currencies.
You know, Matt, as I look across all these different economic indicators and the Forex calendars and all that kind of stuff, we've got a lot of anticipation for the end of a U.S.-China trade agreement. Do you think that's going to happen with this Mnuchin conversation next week?
I think we're going to talk about this for the rest of our lives.
Possibly. Yeah, there's no doubt about it.
Even when the deal's done, the deal's not going to be done. But do we really think we're going to get a deal done on U.S. IP protection?
No, I don't think it'll be a short-term, obviously, issue.
No, it might be. There might be a deal on trade where China agrees to buy X amount of steel and X amount of soybeans and X amount of this, and the U.S. agrees to do an X amount of this, and they might agree on, well, U.S. deficit has to be this in comparison to China or whatever the case is. But are we going to get the soft peg removed from the dollar? Are we going to get U.S. IP protection? Those two major things we need. I don't know. So, but let me put it like this: an announcement of a trade deal doesn't have to have U.S. IP protection and the soft peg to the dollar removed to have a positive impact on the U.S. stock prices.
Right. Right. Do you think it would even be a bigger deal if they got some kind of infrastructure plan between Trump and Pelosi going, or do you think the Chinese U.S. trade talks are even more important?
No, infrastructure is more important.
Yeah.
This is the United States we're talking about. That's a trade deal between the U.S. and China. Infrastructure is $1 trillion situation. The U.S. trade with China is billions of dollars. So I've said this, the only thing that really I see the Democrats and the Republicans agreeing with one another, especially in the next year as we go into that 2020 election cycle, is infrastructure. And I've been criticized a little bit for saying those things because it's like, well, the Dems won't give in to the Republicans. Well, if you represent the U.S. populace and if you represent your constituents, Pelosi and the Dems leadership should go up to Trump and they should say, hey, let's get an infrastructure deal. Pelosi, you can take credit. Trump, you can take credit. Don't care who takes the credit. Could care less. But let's get an infrastructure deal done. Let's get something done that actually benefits the constituents across America instead of something that only helps a select few in America. And an infrastructure plan would help everybody. It would help create jobs. It would help create a better business climate environment, and everybody would support it. I don't know anybody that would be like, hey, listen, let's not have better roads. Let's not have safe dams. Let's not have safe bridges. Let's not have, really nice airports. Let's not put jobs out there. So, I think for the most part that this is something that from a political perspective that can happen. And if it does, be excited for it. We should all celebrate it. And we shouldn't. You should never be haters on something that could have a net benefit to the constituents across America, and that is what an infrastructure plan certainly has the ability to do.
Move on to crude oil, if you would. Let's talk about light sweet crude. Little bit of a pullback there, Matt, with a pretty good sell-off on Friday. Now green candle coming back in. You're below 2 key moving averages, but you're in that still uptrend. Kind of some pivot violations here. What you read on the chart?
It's more the read on the situation than it is the chart, Tim. And what I mean by that is the reason crude really kind of got beat up last week, well, one of the reasons was President Trump came out and said that he had called Saudi Arabia and basically said to knock it off and to bring prices back down. And there was no confirmation of that call. There was no confirmation in any capacity. Saudi Arabia hasn't confirmed that. The White House hasn't confirmed that. OPEC hasn't confirmed that. The IMF hasn't confirmed that. The United Nations hasn't confirmed that. Nobody has confirmed that that meeting and that call actually took place. And it does seem like Trump, and Trump has done this before, is trying to manipulate price in the short term to a certain extent. He does it with the stock market. He does it with the commodity market as well. And I'll just tell you what almost every coach at Tackle Trading in that Friday Scouting Report meeting said about oil, that they believed it was an overreaction to a non-event, to an absolute non-event. And when you actually look at Saudi Arabia, Tim, Saudi Arabia, to show a profit this year, guys, and I just read a report on this morning, needs oil between $73 and $85 a barrel to be actually profitable this year because of certain situations. Now, typically they need oil under $50, but because of the debt they went into in 14, 15, 16, and 17 in that oil war they were going on with the U.S. fracking institutions, is they need oil to appreciate in value here. So do the other OPEC countries. And so it's going to be interesting to happen. But I will tell you, and I'll tell you, there was about 5 coaches in that scouting report meeting that said, we're buying oil. It's just a matter of where we're putting our trigger in to buy oil here because of the overreaction to the non-event. I do expect, maybe not in the next few days, but I do expect oil to reclaim the highs and perhaps break out. Now, with the violation of the pivots, you need to reclaim certain levels to really start to look at this. And if you break this down into that 1 hour chart, you can kind of see the pivot start to form here. Old resistance, old support, you're reclaiming that 63 handle. Here's the next one, right there. That's the important one in my opinion, is right around 64.70. Old support right here, massive resistance. Before I'm looking at a buy side on this, and I am looking at it here, but I need to see it start to reclaim some levels. Give me a nice little bullish uptrend on the intraday numbers and watch that break out of that 64 and eventually reclaim that 66. I wouldn't buy it simply on the dip here because technically you are thrown off given the fact that you came underneath these levels. You claimed the first one, now you got to reclaim the second one. If you break out of that third one at 64.50 by 64.60, you should get back up into that 66.5. This is going to be an intraday type trade though over the next week on crude. It is not going to be triggered on the daily charts. You have to have the ability, if you're going to trade crude this week, you have to have the ability to drop that down into a 15-minute chart, a 30-minute chart, and use your technical skill set on those intraday charts, because as it reclaims these levels, and if it is a buying opportunity, it's going to break out intraday, not on the daily chart, because on the daily chart, if you're looking for a great swing trade here, there is no swing trade here on the daily chart if all you know how to trigger is on dailies until it breaks out of that high here. Because even on the daily, if it comes up to here, you still have those resistance. You have to have the ability to drop that down into intraday charts and to get your triggers on the intraday charts if you're going to be trading oil this week. Oil is going to be a day trading vehicle very similar to the dollar this week, in my opinion.
Yeah, it's definitely, especially with how much news is coming out. Every economic news event can impact the dollar, which can impact oil as well. And you've always got the inventories, even though they've not become as important in the last couple of years. Pay attention to them as well. Next, Matt, let's keep moving through. I want you to look at natural gas for a quick peek. Little bear retracement developing, very much off of our trading radar for a long time, but I actually think it's tradable again at this point.
Yeah, a little bit on the short side.
Yeah. Oh, no, that's what I'm saying. I
Yeah.
mean, you're now trading it at least up and down depending on the situation. Bear retracement setting up here, Matt.
Yeah, it's definitely tradable again. I wouldn't be looking to do any cash flow situations like we like naked puts on natural gas right now. You got a lot of volatility, you got a lot of projections to the downside, but from a technical perspective, you certainly have the technical condition to approach natural gas from a directional perspective right now. But it
Yeah.
would have to be on the short side. There's no buy here until it gets, a standard trend to the upside, which would take weeks to months.
Metals market, move on to gold if you would. Gold
I,
broke below, came
I
back.
warned them, Tim. I warned them last week.
Yeah.
I warned them. I warned them. I said, guys, you're gonna get influenced above 1280. I said you're gonna get tickled above 1280. You're gonna be unduly influenced because you love gold above 1280. But it's bearish in a bearish retracement coming smack dab into resistance levels, and that's what we saw here today. Dollar down and gold down, Tim. That's a technical move, not a fundamental move.
Bearish retracement developing, Matt. It had a failed breakdown, but then also failed tip back up. It's kind of a mixed
I don't
pattern.
think it had a failed breakdown. I don't agree with that, T. And the reason I don't is you broke this level short term at 1290. You got a pivot low here at 1268 by 1270. Even if you say 1280 was the breakdown, I'm not sure that felt. You got a nice standard bearish trend here, especially if you're looking at the past two pivots here, T. You go from 1325 down to the low at 1290. That's a 35-point movement. You got the peak here at 1350 down to the low at 1270. That is a 45-point move to the downside. So I'm seeing momentum to the downside in the short term here, T. I get the failed breakdown out of that 1280 that we had, but if you're looking at that as a continuation, that is certainly lower than that, and that is certainly lower than that.
For
This looks
sure.
bearish to me.
Yeah, I thought 1280 would be more significant. Could have got a little bit more of a run. It seems like it's pay ranging its way
Oh,
down.
the dollar just got hit on its head, though. I mean, the dollar got up into the pay range. Dollar was going to take down, even on positive economics. When the dollars overextend in the short term, a lot of times you got to overwhelm on those economic reports. Not just so great, you got to show better than great. And so the dollar as it was overextended, the dollar expected to come down. Gold, as you just saw in the analysis, gold was overextended on the downside, and expect a little bit of a price back up. I didn't see this as a buying opportunity. Gold's bearish for me, and it's going to be bearish until we double bottom and double top.
Yeah. Let's go through the sectors next, Matt, and start working through them one at a time. I know on Mondays we always do a full market prep, kind of talk about all the sectors. Then we've got a few stock ideas I want to run through at the end, but break down the Excels for me if you would.
Yep. First and foremost, whenever you're breaking down sectors, it's always in response to kind of what is from a technical perspective. When you're let me rephrase. When you're ranking sectors in the newsletter, you always start with where the S&P 500 is at, and then you rank right or left based on what you're seeing in the individual charts within the sectors. And then when you're looking at the individual components, you will modify those sectors. And I had one of my students with me, Tim, Jonathan. I had him hang out with me for an hour after we got done with the halftime report on Friday, and I just walked him through as how I go about ranking the sectors, and it was really cool. He's a very new student of ours, and a hashtag team member for the past month or so, but very, very new to the markets, and it was just really cool to walk him through how to analyze those sectors, and I hope he got a lot out of it, because I certainly had a lot of fun doing it. But in terms of ranking the sectors, it starts with the S&P, and then you rank right or left based on if they're outperforming or underperforming. You then look at the individual components of the sectors to kind of, get a better understanding of what's going on in that sector outside of just simply looking at the trend of the sector. Now, the S&P 500 we have ranked at a positive 15, got a slight upgrade, 5-point upgrade from, Jonathan, I really enjoyed it myself. Had a slight upgrade from the 20 mark to the 15-yard marker based on what we saw last week in the S&P 500, the price appreciation and the potential breakout that we're seeing, and hopefully confirming today as well. So looking at that, let's go down the aggressive sectors first. Basic materials, we kept it very similar to the 30-yard marker we had it in the previous week. I was a little more bullish than the rest of the coaches on the basic materials sector, though. They were a little concerned that we had the deeper pullback than what we thought, and the market did depreciate on the week versus the S&P 500 going up. So based on my a little bit, probably a little too bullish versus the coaches being maybe a little too bearish, we kind of kept that at that 30-yard marker. I'm looking at this as a bullish retracement at this point. Confirmation for me would have to get back up above 57.25 though. And you got an inside candle right now. It's really holding its support channels. As you can see over here, old resistance is now acting as new support. You're in between rising moving averages, but you're underneath the 9 EMA, which is also smack dab at 57.25. Anything aggressively in the material sector needs to start with the material sector getting above 57.25 in my opinion, but we did keep the ranking there at 30. Communications got a slight upgrade, I believe a 5-point upgrade on communications, and this thing is just euphoric, and a lot of it was based off the Facebook and the Twitter earnings reports we had last week. So communication got a 5-point upgrade to the 25-yard marker based on that momentum we're seeing now. It is completely overextended. This is pure momentum left and right, so keep an eye on that momentum, but it looks like it's continuing the momentum, especially on the backs of Facebook confirming that bullish engulfing candle here today. So communications momentum based play should get back up into those highs at 52 in communications. Energy on tap here. We do have some energy earnings reports coming up this week, so keep an eye on this sector. Couple of them, I believe British Petroleum is reporting this week. I want to say RIG is reporting this week, and I'm missing Royal Dutch Shell is also reporting this week. And Royal Dutch, it's not a very popular stock to trade in the U.S., but it is the biggest of the bunch. We're talking about a $250 billion company in Royal Dutch. I mean, that's up there with the Exxon Mobils of the world. ConocoPhillips is also another one that is reporting this week as well. So you do have some reports this week coming out. Our assessment on energy, and we did downgrade energy into the 40 because you came back right smack dab into those old levels of support, an overreaction to what we saw on the oil news coming on Friday, but it was also on the backs of Chevron and Enron's underwhelming earnings reports from last week. So we did downgrade it based on Enron. I can't believe I said Enron. ExxonMobil.
I was just about to say, I'm like, Enron's reporting earnings. Wow.
You know, Enron reported a fantastic earnings report 15 years.
Must have been terrible.
It was the most beautiful earnings report you've ever seen, Cody. 6 months later, they were bankrupt and they were lying to all their investors, but it was a beautiful, beautiful earnings report 15 years ago. But Exxon and Chevron's earnings from last week were underwhelming. What happened with oil? We certainly just had to downgrade it a little bit. We downgraded it down to the 40-yard marker. Industrial index also got a downgrade from us this week. A lot on the backs of Boeing and just our concern overall with Boeing, but it only got a 5-point downgrade. A little bit of a gappy situation, came a little concerned, but keep an eye on this here. You came right into that 20-day moving average. It does look like you're confirming above the 9, above the pivot high at about 77.65. With confirmation, we would put that back up there in the 35 to 30-yard marker. So keep an eye on that, but we did downgrade it down to the 30-yard marker this week. Technology on tap, or we look to the NASDAQ. This is basically just the most beautiful chart you've ever seen in your life in technology, and we're not going to downgrade that simply because one day it came down and kissed off the 9. The 9, 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 the 9. You're seeing the 9 play a role here. Every single time it touches the 9, it moves back up. I'm not going to question that analysis. We're going to keep it at the 10-yard marker and let the euphoria continue. Now, again, remember, technology, NASDAQ, very similar. NASDAQ has not broken out yet. Keep an eye on the NASDAQ for those technology stocks. Consumer discretionary got an upgrade. It is now currently tied. Let's go ahead and look at the chart here. It is now currently tied with technology for the #1 ranked sector. So let's give a hand for discretionary stocks out there. Good job, discretionary stocks. Upgrade to the 5. It is currently ranked at a 10 with technology, and just a lot of euphoria happening here. And I like the pattern a little bit more on discretionary than I do on the technology chart. You got a clear signal above 120.90. It's forming a little bit of a wedge, high base type situation. A breakout here would be very nice. Financial, Tim, got the biggest upgrade at tackle trading with an upgrade to the 25-yard marker. That's a 15-point upgrade. That's a big upgrade for us on a weekly basis. Ori talked a little bit about it. Love the breakout we saw here on Friday, and I absolutely love the continuation. But Tim, it's not just the breakout in financial. When I was breaking down the individual components on Friday as I was preparing for the meeting, I saw breakout potential after breakout potential after breakout potential on your Goldman Sachs, your JP Morgan, your Bank of Americas, not your TD Ameritrades, but the other banks were looking really well there. Financial, keep an eye on that one. I expect some good things to happen this week on the financial space. XLRE utilities, we'll look at those both together. Both got downgrades to the 40-yard marker in the newsletter. Real estate got downgraded because I am very concerned about this little bearish retracement rollover moving average here. Also with utilities, you're seeing something very similar here, a lot of neutrality. And when you're on a risk on environment, Tim, where the S&P is breaking out in technology, think about this. Our two highest rated sectors are two of the most aggressive sectors, technology and consumer discretionary. Both extremely aggressive, both extremely euphoric right now. This market is not a fearful market in any capacity. Fear does come back fast, okay? And when it does, be here in the report so we can look to assess that. Fear does come fast, but at the end of the day, we got to trade what we see. And with utilities and real estate in a risk-on environment, these two sectors aren't going to be very good. They're full of dividend payers, and they're good for dividend payers. But from a directional capacity, these safe haven sectors are not going to be good from a directional perspective right now. And so both energy, not energy, but real estate and utilities. And by the way, the Hess trade I prepped in the scanning report last week, that just triggered. That's what you saw there. Now, the next sector, consumer staples, also consumer-driven companies here, more on the safety side than consumer discretionary. Staples, think food-based companies, and discretionary, think retail companies. But both consumer-driven, and consumer staples is doing very well. Love a breakout potential here. Has not confirmed, slowing small candle at 57, showing a little bit of loss of momentum at that resistance channel, but a breakout here would be very powerful in my opinion, as you're not only confirming above 57.20, you're confirming above this level here at 57 as well. Keep your eye on that. Break that down into weekly chart. You see these levels play out. That breakout price should appreciate, in my opinion, back up into the all-time highs on consumer staples. So keep an eye on staples and consumer staples stocks. And healthcare finally, but certainly not least, but yes, certainly least. Healthcare coming into a bearish retracement, did get a slight upgrade from the -25 to the -30 range here in the Tackle newsletter, but I'm very concerned, and I would be looking to short left and right here based on this bearish retracement. The only problem with that, Tim, is, and it is a problem, and it seems to rear its ugly little head every now and then in earnings season, is you got Pfizer, Merck, Lilly, Amgen, Gilead Science, CVS Corp, Celgene. I mean, it's partly healthcare week in earnings, and that's certainly going to throw a wrench into the analysis. But keep an eye on this. When you have a lot of stocks in this place, like ISRG, for example, ISRG, look at this bad boy. Get killed before earnings, killed on earnings. This reminds me so much of when you screwed me over, ISRG, that I might actually short your company right now just to make back what you did to me 5 years ago, ISRG. Payback, you know what payback is. And yes, revenge is not a strategy, but it does make me feel a lot better sometimes. And so ISRG might get some revenge here, but beautiful bearish retracement here setting up on ISRG. United Health looking very similar, coming back up into those breakout channels that it broke down out of, slowing its momentum right there on the snapback coming out of earnings. Keep an eye on that one. This would have to get under 230 for me to re-trigger. ISRG looks a little better in the healthcare space, but keep an eye on those stocks reporting earnings. That's going to throw that's going to throw some variables into the analysis from a technical perspective on both United Health and ISRG.
For sure. There's a bunch of stocks triggering. You mentioned Hess, Matt. We all kind of have a pick of the day here. You did an incredible job on the stock report. Why don't you talk about that for just a minute or two?
Well, did you guys enjoy the stock report this week? Pro members, let me know what you thought of the stock report in the chat there. And you can also make a comment on the stock report. Hit me up on Twitter at MattJustice13 or the Clubhouse. I went into the stock report this week, and I didn't know I was going to do the stock report until Friday. And so literally, Tim, I found out I was doing the stock report on Friday after we got done with the scatter report meeting. And so I was kind of running the show there in the scatter report meeting, and Noah's like, hey, Matt, I got a mentor student coming in for Legacy tomorrow. Is there any way you can do the options report? And I'm like, I don't want to do the options report. Gino, you do the options report and I'll do the stock report. So I found out I was doing the stock report on Friday night, and I thought about doing it Friday night, and I was like, nah, I'm gonna sleep on it, think about what I want to talk about. Woke up Saturday morning, and I was just in the mood. Right, you know the mood I talk about. You see me in that mood a lot, and I get an idea in my head, and I think it's going to be awesome, but I don't know if it's going to be awesome. But I'm still going to do it just to test if it's going to be awesome. And so I decided to do a deep dive write-up on a bullish retracement, kind of the step-by-step approach we look for in bullish retracements. And then I broke down a stock I was looking at on Hess on which was a trade on the stock report, and I broke it down on how we would go about putting in an OCO bracket order versus a stop loss order versus a entry order. I talked about the rules of going into that, and I wanted to analyze each stock in the report, Tim, and I wanted to give it the detail that it needed for our team. And so as I got going into the stock report, I started breaking down into 30-minute charts, and I started just going through the analysis, and I started really getting into the analysis of how we were looking at these in the scatter report meeting. And, I'd break it down into the 30-minute charts versus the weekly charts to show them kind of what we're looking at from a trader's perspective. And I wanted to give them a real inside perspective on how we go about assessing these from a trigger perspective or a stop loss perspective. Didn't talk a lot about targets outside of what the analysis was going into the targets, but I really spent a lot of time on entry triggers and stop losses. And at about the 35-minute mark, I hadn't even started the bearish ones yet. And so I was like, oh, wow, I got to put this on 1.5 mat speed, or it would have been a 2-hour report, Tim. And so the second 25 minutes in the report, I do go a little faster. But you guys have the recording. You can go back and watch it as much as you want. But I really hope you got a lot out of that report. I had a lot of fun doing the report, and as an educator, as a mentor, sometimes you just go into the deep dive and you don't know where it's going to take you, but you just enjoy the ride. And there obviously we're looking at Hess here. Did a deep dive on Hess, by the way, with the oil rebounding, I felt like Hess was going to be an opportunity for us. And so I did an OCL bracket order, stop loss placement, all of that jazz. And that was kind of my stock. But the stock I'm looking at today is Bank of America. I love that breakout that we're seeing here.
Yeah, there's quite a few actually, and I love the report, Matt. I know it was a longer report than normal, but I think our clients definitely love it. You can look at the chat here; they actually were fantastic. So
I literally I thought for a second people were like, Matt, I need to get through my analysis in 10 minutes. I'm thinking, everybody knows me. If somebody says go shorter, I'm going longer. I'm a contrarian that way. In the giga, speed internet Twitter environment we live in, where people only have like 5 seconds before they lose their entertainment, it's the people that watch 1-hour reports and prep the market that are going to have all the money, and it's those people that are going to employ everybody else who only has a 3-minute time frame.
Mm-hmm. Yeah, I agree. And by the way, it's okay to go long if it's good, right? I'm not sure Avengers Endgame was good. I haven't heard great things all the way across the board, but
well, I've heard great things. I've heard great things, not across the board, but I've heard it's got a 96 rating on Rotten Tomatoes.
Cody, did you see this?
I haven't seen it yet, no, but I mean, when you break an all-time opening weekend record of
how do we not start with Disney?
$1 billion in one weekend.
1.2 billion.
Billion in their opening weekend.
$1.2 billion. Guys, Endgame's going to shatter the 3 billion record by Avatar. They shattered the Thursday opening. They shattered the weekend opening. They shattered the international opening. They shattered the Chinese opening. I mean, they did everything that Hillary Clinton thought she was going to do 2 years ago. She shattered the glass ceiling. I thought Cody would like that one. I'm¬ sorry to all my Hillary fans.
Oh, that was good. That was good.
I had to. It was there. Oh, by the way, Tim, I also have a very, very important Game of Thrones theory.
Okay.
I can't say it yet.
All right.
I'll
Don't
say it on the
spoil
podcast.
that. It's only one.
I'm curious what y'all are going to talk about there, because
it's not a theory on Game of Thrones. It's an analogy on the central bank and Game of Thrones. I had a dream, Tim. I had a dream on this, and I can't say it, but I am going to say it at the very end of the podcast today. So if you want to get the analogy, I can't say it because there's a spoiler there, but yeah, and it was great last night. I really enjoyed it too. But my analogy would be a spoiler, but it is central bank related. And Tim, I've told you my analogy. Is it spot on?
It's really good. Actually, it's really, really, really good. But
I even wrote it down. I even wrote it down out of my dream. I'll just show you my notes. These are my notes. You can't see it. This is my notes on the analogy right here. I'm telling you, I dream about it. It's good. And it has everything to do with printing money, causing hyperinflation, and killing something.
Mm-hmm.
But I'll get into it when we get into the podcast. And it won't be at the first of the podcast, so don't worry about spoilers. It'll be at the very, very end of the podcast. Good. Your energy's low.
I was just thinking the same thing, Matt. Like yeah. Tim's kind of been.
I've really had to carry him today.
I'm Ben Jeb Bush in this one today. Yeah, definitely. I got in late. I actually watched that Game of Thrones episode late after I got my flight in. I flew in from Houston, and then I got up early, so I'm working on about 4 hours of sleep. But I had to watch Game of Thrones, even though I was exhausted, because I knew you would spoil it if I didn't. And I knew Mark and you and everybody else go onto Facebook, and everybody's ruining everything all the time. You have to avoid social media. Be fair, if you don't want to have spoilers.
Tim did teach for Legacy the last 3 days. Got on a flight at about 7 p.m. Central Time. Got into the Salt Lake City at about 11. Got home about midnight. Then was forced to watch Game of Thrones, which was an hour and a half long. And he wakes up at 5 o'clock in the morning. So I had to poke the bear a little bit on that.
Yeah, it is what it is. Yeah. All right, guys. One of my favorite stocks today actually is ANTM, Matt. I like the bear retracement. You were talking about healthcare, post earnings reaction, Doji, falling moving average. It really took it on the chin a few weeks ago when healthcare was dropping out. But a lot of the healthcare stocks, they're going to be dependent on earnings this week as well, like you talked about.
Yeah. Cody, stock of the day.
I'm going to use Noah's simple dad joke, which is true, and it's Bebop is popular.
Yeah, you know what? You can always anticipate a corny old man joke, dad joke out of Noah, and it always works.
And it works so well. Like seriously, it's Popular Incorporated. Like seriously,
well, we were literally analyzing this in Friday's scouting report meeting, and we're analyzing entry stops and targets, and all of a sudden Noah comes in and says, that stock's real popular, guys. And I don't think any one of us, I don't think any of us really trade Bebop.
Never seen this company until I made the trade on it.
So we're like, really, Noah? It's a really kind of the first time we talked about it. Are you sure? He's like, oh yeah, it's way popular. And we're like, oh damn, Noah got us. Yeah, Noah got us.
Yeah, nice high base breakout that triggered this morning. Right about 57.75, and it blew through that in the first minute or second minute of trading, and just hasn't stopped since.
Yeah, good breakouts, guys. And Tim, I know we're going to shut down the shop here right now, but guys, those reports are really good this week.
There's a bunch of stuff triggering too.
Check them out, and definitely give that stock report a nice little thorough review and read. And if you have to watch the video multiple times, guys, I promise you. And Noah said this on Twitter. I'll just say it again. It was a swing trading clinic in that scouting report.
Mm-hmm. Yeah, no, I agree. Get over there, get the pro membership, sign up for Tackle Trading, and start watching those reports and get that value out of each and every weekend. There's no doubt about it.
Like and share. It's a good show today. Like and share.
Fantastic
I'll
job
solicit
today.
for you today, Tim.
There you go.
Like and share. Tell a friend, tell a family member about it. Help us build the tackle community to benefit the entire community. So make sure you get those likes and those shares up. Make sure we get that Fibonacci Goldilocks retracement of 50% on the live view, which should be right about 40 because we hit the high at about 79 today. So there should be about 40 like and shares because we understand not all of you use Google, which means you can't like and share. But if you can, we appreciate every one of them. Love Team Tackle, guys. If you need anything from us, let us know. This week on tap, we got the Traders Lounge every day at 11 a.m. Got the halftime report every day at 12:30 a.m. Got coaches shows on Tuesday and Thursday night. Got a master. Do we have a mastermind on Wednesday? Pretty sure
I'm sure we do. Yeah.
Got a mastermind on Thursday and more scanner reports, more trading all through the week. Thanks, guys.
Sounds good. See you tomorrow.